Hi there, Serial Trader here. Let's have a look at the major US indices, as it was quite an eventful week for them. And starting off with the wave chart of SPX. So I'm quite comfortable now labeling that, yeah, we have our triangle wave 4, and then we did a nice 5-wave advance to complete the final move, which is a larger degree 5th wave. And within that 5th wave, you got the nice 1, 2, and then a 1, 2, 3, 4, 5 extended third, and then a 4, 5. So it counts as complete. And now we have the actual price evidence of the big reversal. So now we're no longer trying to say, oh well, it can be counted as complete. So let's look, for potential reversal. Now we got the reversal. Oh, did we ever get it? This is a big move. So I'm comfortable labeling a 1 down, 2 up, basically a double top, a near 100% retracement of the initial move down. Again, high of 29.39.86 on the wave 2. And the origin of wave 1 was 29.40.91, so almost a perfect double top. 1 down, 2 up, and then huge, strong third wave down. There's no other way to label this other than a third wave. You can't go A, B, C down. You can't go W, X, Y down. The only kind of price action that has this kind of rapid, volatile movement is a third wave, okay? Now, it looks like that third wave is now in place. We've started bouncing off of there. So now the next move of significance, I would say, would be a 4th wave up. And, I got a couple fib levels to look at. So the overall retracement of this third wave, the 382 comes in at 27.98, so just about 2800, which was a former support level, roughly 2800. So if 2800 now act as resistance, and also that's 382 multiple, that'd be a pretty natural place to bounce up to in a 4th wave. Above that, we have the 50% retracement. And really, I doubt it, but we go up to the 618 retracement too. Really, anything below this wave 1 extreme here, which that was 2903. So basically, anything up to 2900, there won't be any 4-1 overlap just because of how far and how fast this third wave came down. But I would expect the 4th wave to be something more typical, like the 38.2% or the 50%. But we don't know yet. The pattern's still developing. And then after that, I would expect a failure, a rollover, and then come down to test or break these lows in a 5th wave. And then at that point, we have either a larger A down, if this is just part of a larger correction of our overall, multi-year uptrend. So, A down, and then B up, and then have a third leg down, maybe to somewhere in the range of the previous 4th wave triangle here. That's certainly a natural place to correct to if we're doing a large degree correction. There's that, or, and I'll drag these ABC labels back over here for now. There's that, or we've either... So that we have either done that, or we put in a major, significant, macro top, major cycle top, okay? And now we're going to be coming down in the initial 1st wave, okay? So 1, 2, 3, 4, 5 for 1, ABC up for 2, strong third down that clearly gets below the February lows of this year, and then a 4 and a 5. Now, if we did that, then we're in for a true bear market, and that could be nasty for a lot of people. But the thing is, we don't have enough information yet to make that determination. We're going to keep it, one wave at a time here, not make any predictions without the actual price evidence to back them up. But what we do have is a clear 1-2, looks like a 3 down complete, looking for a bounce shorter term, and then looking for another leg down. So that's the current focus. That larger pattern in the context, it fits, within the overall trend here, that is yet to be determined. All right, with that being said, let's go to the SPX Candlestick Chart. And yeah, we smashed through that 200-day simple moving average, which surprised a lot of people, because even back in the February lows, and then the retest over here, which I believe was, when is that? In April. Yeah. we basically held it every time, roughly speaking. But here we closed well below it on Thursday and then bounced up and just basically closed right on it on Friday. So kind of a natural area to find some initial support, although I don't think it'll hold. Daily chart, we're well below the T line. The 3T line is way below the T line. So we've clearly changed the daily trend to down currently. Anything on the weekly chart? Okay, so last week we had that bearish engulfing weekly candlestick. Huge confirmation this week. Huge bearish follow through. We closed way below the weekly T line. The weekly 3T line is crossed below the weekly T line. So we're not coming, I mean, even if this is just part of a larger correction and we're going to go higher eventually, we're not coming back to these highs for quite some time in either scenario. It's going to take a while to reverse this technical damage, if it can be reversed. All right, so that's SPX. We'll go to the Dow Jones Industrial Average. Dow got dragged down with everyone else, closed below its 200-day average as well on Thursday. Had a good bounce on Friday, and in comparison with its 200-day moving average, a little stronger than SPX there. But, you know, obviously huge technical damage, way below the T line, 3T lines crossed way below the T line. So very much the same scenario for the Dow. Anything weekly on the Dow worth mentioning? No, just a big red candlestick and a close well below the T line. So yeah, same message there. I'm sure the Dow is going to have a bounce along with the rest of the market here, as I pointed out with SPX. Let's go to the Nasdaq Composite. Nasdaq got well below its 200-day average on Thursday, closed well below it, even closed below it on Wednesday. Good bounce up here, but really we're just hitting that 200-day, and that'd be really weak if we only hit the 200-day and had it just act as resistance now. That would be very bearish. But I would suspect a larger bounce to play out here on the Nasdaq, just to get some fib levels to consider. The 382 retracement of this wave would be 75.93, so around 7,600 on the composite. The 50% would be just about 7,700. So those are a couple levels to be looking to, as well as just watching the shorter term pattern. Okay, so anything on the weekly worth mentioning here on the Nasdaq? Well, Nasdaq, huge bearish engulfing last week, engulfing 4 prior weeks. That was a very strong sell signal, and it came through. Big red week this week, bouncing off that 50-week moving average here. Just worth noting, I suppose. But yeah, Nasdaq, we're not going to see these highs for quite some time. I'm very confident in that. Again, even if we are just doing a larger corrective move, it's going to be multiple months, I would say, in the best case scenario, to get back to the old highs, and that is by no means a high confidence outlook at this point. VIX. So VIX has definitely broken out of its sideways to downtrend. VIX is now trending up. Obviously, we've pulled back from the highs so far, but it would have to come way, way, way down to get rid of the bearish implications that VIX is showing here. VIX is on a breakout, which is a bad thing for stocks. I mean, stocks are tanking. So unless stocks can really come back to the upside and VIX can really get back down into its low range, until then, the market's in trouble. All right. That should be good for now. Let's see what happens next week. Serial Trader signing off.